Get into the earnings season, of course, and here's our special offering, Quarter Se Quarter Tak, in which today Abhishek is standing by to tell us what we can expect from the banking sector this time around. Abhishek, over to you.
Well, Prashant, our banking sector saw loan growth of 8.6% YOY and about 1.8% quarter-on-quarter. So remember that, quarter-on-quarter loan growth in Q3 was around 6.65%. Hence, the growth that you see in Q4 when compared to Q3 is on the lower side. Private banks have gained business or market share as they have given in the business updates, which are pretty strong. They continue to take away the market share from PSU banks. So net interest margin in this quarter may improve or remain stable on a sequential basis. However, going ahead, net interest margin will expand given the fact that we are in a rising interest rate scenario. Asset quality will improve on account of lower slippages and better recovery. NPA provisions or credit cost, as we call, will be lower on a sequential basis for majority of them. So strong earnings or PAT will be seen for majority of the players, driven by the fact that provisions will be lower and NII growth will be stable. So we'll continue to see outperformance coming in from large banks when compared to mid-tier, regional or smaller banks. We have some estimates from Kotak Securities, who estimates SBI's NII growth to be 16.9% YOY and profit growth to be 69% YOY. Now for HDFC Bank, they expect NII growth to be 15.5% YOY and profit growth to be 28% YOY. For ICICI Bank, they expect NII growth of 19.5% YOY and profit growth of 64% YOY. For Axis Bank, they expect NII growth of 22.5% YOY and profit growth of more than 51% on a YOY basis. Back to you.
Thanks, Abhishek, for that. Kunal Shah is joining us. He tracks the banking space at ICICI Securities. Kunal, hi, good morning. Thanks for joining us. Let's start with the biggest private bank that, of course, comes out with numbers as early as Saturday, HDFC Bank. What are you expecting and what's your view here?
Morning, but really sorry, won't be able to comment on HDFC Bank as it's in restricted list.
Okay, fair enough. In general then, how are you viewing the earnings season for this quarter?
So overall, this earning will largely be characterized by stability as well as normalization across most of the operating parameters. So be it with respect to margins or with respect to slippage as well as credit cost. And we had seen all the business updates wherein credit growth is quite strong sequentially for the private banks. So when we look at it, most of them have reported somewhere in the range of 4 to 8% kind of sequential growth. So to that extent, in fact, at net interest income level, we are expecting more than 20% growth for the entire private banking space. Though on the operating profit level, it will be somewhere around 6 to 7%. And given that credit cost will be lower on year-on-year basis, Q4 had a relatively higher credit cost. So because of the lower credit cost, in fact, earnings growth will be much higher. It will be upwards of 70% for the entire space.
Okay. In fact, Kunal, we were just having, since you're talking about growth, we were just having a discussion with the management of SBI where they said that the FY22 loan growth will continue to be in double digit and they are perhaps expecting things to improve further in FY23. What is your own expectation of the PSU banking lot on SBI, your thoughts, and in terms of earnings, what are you looking at?
Sure. So when we look at the overall system-wide growth, in fact, by the end of March, when we look on a year-on-year basis, on an adjusted basis, it comes to somewhere around 9.6% year-on-year growth for the entire system. Last time also, we saw SBI grew 1 percentage points higher than the system. And in fact, I think if they are saying that it will be slightly in a double digit, I think that is quite a possibility with 3 to 4% kind of a sequential growth. We can see that number coming in from SBI. But besides SBI, when we look at the other PSU banks, in fact, they would be losing the market share because system-wide growth is still somewhere around 9.6, 9.7%. And we are seeing most of the private banks reporting more than 15%. And in fact, even if SBI is higher than the system growth, then it's but obvious that the other PSU banks, the growth will be relatively in the lower single digit.
Okay, growth will be in the lower single digits. What about these these NBFCs, what is the expectation this time around from the likes of Bajaj Finance, Finserv, and the other NBFCs that are in the vehicle financing space particularly? Any expectations there?
Sure. So when we look at it, particularly with respect to Bajaj Finance, in fact, they have shared the business update, and again, adjusting for the IPO financing, the growth has been quite strong at 26%. So it's a strong sequential growth coming in from Bajaj Finance. When we look at the vehicle financiers, in fact, Chola has also come out with the business update, wherein disbursements have been quite strong. And in fact, new businesses have supported the disbursement growth better than what management has highlighted last time. So looking at this disbursement growth, we are expecting sequential growth of 6% for Chola. In fact, for MMFS, it will be somewhere around 0 to 2% kind of growth in the AUM. And when you look at it again, Poonawalla Fincorp, in fact, not a vehicle financer, but still when you look at it in terms of the business update, what they have shared, there also we have seen a pretty strong traction. So across the NBFCs, I think some of the NBFCs are still consolidating, but otherwise the NBFCs which have shared the business update, in fact, the growth is quite strong out there.
Okay, we'll leave it there today. Kunal, thanks a lot for joining us. That's the preview on banks and NBFCs. The market's cooled off. It's given up quite a bit of gains.